began to see the market change in about 1997 and began to track it. By 2010, it became clear that many of our market areas were stabilizing, and some of them strongly. Entry-level markets priced under $200,000, Golden Gate City, Golden Gate Estates east of 951, many areas of East Naples. I began to see those markets swing into a shortage of supply that was incredible. So incredible that I would check my statistics 2 or 3 times because I could not believe what I was seeing. I began to see Golden Gate City trending toward 2 or 3 months of supply. We had situations where we had the same number of pending sales as we had closed sales in the last 12 months. That was exciting. But I can stand here today and tell you that now for 24 months, 36 months in some cases, that trend has been sustained. Those markets are still in a severe shortage of supply. And while that was happening, closer into town, we began to see our markets firming up and stabilizing. Very solid neighborhoods like the Moorings and Park Shore and Coquina Sands, who had been carrying maybe 2 years of supply down to 1.5 years and then balancing out. And market areas today that are now in a mild shortage of supply. And we consider anything where we have less than 12 months of inventory on the market to be in a shortage of supply. If you compare the number of sales in the last 12 months with the number of current listings, and when the number of listings fall below the number of sales in the last 12 months, we're looking at a shortage of supply. I'm now beginning to hear about competition for individual properties, be it houses or condominiums. I'm beginning to hear that folks are looking at a property on Tuesday, wanting to go back and buy it on Wednesday, and it's gone. I'm hearing that the pieces of real estate that really bundle up all the value influencing factors, location, condition, quality, that those are almost gone, that there's not that much to choose from. We're also seeing new construction coming back into our market. Some wonderful sign. We began to see that in the last half of 2011 in a very measured and calculated way. Builders answering the demand as it came. And we've heard from the builders that they have been able to bring their prices up in terms of 3 or 4%. And while we see all of these elements returning to our market, that's what's most important, is that we get back to a place of tranquility in the market and a good balance between our resale market and our new construction. Our market continues to be fueled by a high percentage of cash purchases. It helps our market move ahead when other markets might not. I think the biggest element kind of keeping some control on our market today is the difficulty in getting mortgage financing. That may be almost the only element, because our demand is very strong. Our prices are at levels that we will likely not see again, ever. In those market areas where the supply is so short and there's so much competition, property values have already started going up. Quietly and subtly, but they're going up. Going forward, we're going to see new construction continue to play a role in our marketplace. We know that buyers like to buy new, and our builders are going to serve that purpose. Increasing values are going to allow some people to refinance when they could not do that 12 months or 24 months ago. It's now going to become a possibility for them. The high percentage of cash transactions in our market area are going to continue to allow our markets to move forward and our values to increase despite the restrictions placed on us by mortgage lending. So I think in the short term, we're going to go back to where we were in 04 in most market areas. And that's a good place to go. It's a very solid market. Everything we see in our market today is very logical, very foundational. And we're healing just as we should in exactly the kind of time frame that we should. So I think that in 2012 we're going to see all of our 2011 trends continued and sustained. I think that mortgage lending is going to loosen up a little bit. And I think that when we stand here 12 months from now, we probably will feel even a little bit better than we do today.